So now we're about to begin. So just a few minutes. So, okay. So, sorry, I was kind of held up with work. So I hope you can hear me. So we said that we're almost done with our training, or right now we should be perfecting what we've been doing. So it's been quite a good year and a good, time. I can say I've had one of the best years I've had in a very long time. Not just trading, also interacting with new traders, interacting with people, markets. The idea with Forex is always, you should always be learning. If you're learning, or if you're always learning something, that means you're growing. And if you're growing, that means you're doing well. So today I wanted just to touch something small. It won't take long because we are just continuing. We did Fibonacci on Tuesday. So what I'll do today, I'll just combine what we did on, let me share my screen. So 1 minute, I'm getting my notes ready. So what I'm going to do, so today is on a Friday. Fridays are one of my best days. So, because this is the day, okay, 1 minute. I'm getting my notes ready. Yeah, because this is the day whereby at least you can review how your trading has been. It's also the day where we look forward for the weekend, go relax, go be with family, just go, just take a recharge. Recharge means you like take an off a little bit because not always trading, markets. So just a minute, I'm getting my, so I'm using 1 minute. So I think I got it. Yeah. Then now we go like that. Yeah, so my screen is ready. So let me share my screen. So as I was saying, today is on Friday. So Fridays are where we review our trades. Then we are also able to review the week, share screen. So yeah, so this is my week, that how it has been on Euro USD. So all I'm doing now, I'm adding oscillators. These are called oscillators because they oscillate. So today's class mostly we'll be talking on oscillators. So just a minute. My machine seems to be hanging a little bit. So where is he? So just a minute. Around. Come on. So I think we are back. Sorry. So 1 minute. Yeah, so this is okay. So let's get started. So today I'll just touch on oscillators and momentum. So I hope I'm visible. Yeah, I think I'm visible. So let's go. So we've done a lot. We're almost done. Today is almost 29th of October. So that means we should be done, at least theoretically speaking, we should be done with our class. Practically speaking, we should be beginning, because I usually do 1 month of theory and 1 month of practical. So that's why you've seen we have done support resistance, Japanese candlesticks, Fibonacci, moving average. So today I'm moving on oscillators. So this is what I'll be doing today. So minute. This ones I will not touch. Hekenashi, Elliott wave, harmonic, I won't touch because they're a bit advanced. So this one we might do on stage 2 once we are done with the first class. So first class is usually intermediate, then we have advanced. Advanced is where now you become a professional trader. So there are other things you need to learn, but we will do next week. I think we'll touch on a little bit of environment, trading breakouts and fakeouts, a little bit on divergence. So that's next week. Then we'll also do Thursday, we should be doing fundamental analysis. Then now, by the time we are on fundamental analysis, now we should be able to analyze the market, of course, and start making some really, really nice money. Because so by next week, you should all be at least somewhere. So for this week, let's just go to oscillators, because what we are doing, we are formulating a trading strategy whereby you can be able to be making money on yourself, or you can be able at least to be, you know, somewhere trading. The idea is you learn the first basics, what is candlesticks, what is support and resistance. And then from there, as you're learning, you also are able to apply. So in the previous chapter, or in the previous grade, popular chart indicators were discussed. So on these ones, before we start our class, let me just touch on them, because the idea is we have so many indicators out there. Because you can see this is Fibonacci, this is moving average, and then we have this is MACD, this is stochastic, RSI, volume, and the rest. So which ones do you usually use, or which ones do you prefer using? So I'll just touch a little bit on them. The common ones, we have Bollinger Bands, we have channels, we have MACD. So for me on these ones, I usually touch on the bands, MACD, parabolic not much, stochastic now, I'll be touching on stochastic and RSI. So these are the two that at least I'll touch for today. I show you how you are able to use them on the chart. MACD also a little bit, then we'll ADX later on once we are done with fundamentals, because now there's a place now we'll be touching on momentum. Do I have it here? Let me have a look. Just a minute. No, I don't have it here, but I have it on. I also don't have it here. So let me use it on later on. So I'll be teaching you how to check ADX and volume, be able to measure volatility, and then trading multiple chart indicators and best. So these ones you read. So let me give you assignment. At least go read on, especially ADX. ADX, go read on it. And also we'll now be combining them, because you can see there are many, and also understanding them. So for today, let me just touch on the oscillator. So leading and lagging indicators. So all these are indicators. We have manual and we have automated indicators. So the idea is to get the best. The best means the one that is bringing more return with less work, or not just less work, but at least the one that is consistent and you can be able to see it's bringing the right opportunities. So we have covered a lot of tools that can help you analyze potential trending and range-bound opportunities. Still doing great, awesome. Let's now move to grade 6. In this lesson, we are going to streamline how you use this chart indicator. So in your chart, you should be able to at least have 2, 3, or 4, the ones that you use. We want you to fully understand the strengths and weaknesses of each tool, so you'll be able to determine which one works for you and which one doesn't. So let's first discuss. We have 2 types of indicators. Indicators now, we have those ones showing us what the future will do. There are those showing us what it's doing now. There's those showing us what it will do in future. So let's start with a leading. A leading indicator gives us a signal, before the new trend or reversal occurs. So another thing, markets have been trending. You can see this is a very big trend. As you can see on Euro, you can see this is a trend. It was a very big one. Let me put down here. So this was a trend on Euro. You can see, but now it seems to be reversing around this area. So the idea is to know when this reversal is about to happen, what do you do or what do you look at? So my chart would look like that. I'm going back to 22nd September, but I can go a little bit shorter. Let me zoom in a little bit. So for the markets, you need to learn to zoom in and zoom out. So the reason I'm zooming in and zooming out, I'm saying now I'm gone up to 7th October. So yeah, let me see the market as of that. And then I'll remove this indicator so that I draw another one. Just a minute. Object lists, then remove this one. Has it moved? Not yet. So I think it's okay on H1. Yeah. Yeah, so let's see it from there. So I think that's okay. So all I'm doing now, I'm not going to touch on FIBO today. Today I'm touching on MACD, RSI, and stochastic. I'm touching on these three. This mountain look like bars, and this one and this one. These three indicators are the ones I'll be touching today. So let's have a look how we use them, because I'm going to use this graph from here. I can go, yeah, we have said from 7th October there. So that at least we can be able to see what the euro is doing on 1 hour chart. Then today is Friday. This was yesterday, Thursday, Wednesday, Tuesday, and Monday. Then this was Friday, Thursday. Yeah, at least for the last 2 weeks. So let's just check the market for the last 2 weeks and see where we could have made at least some pips or some money. So let's continue. So we have leading. So there are two types of indicators, leading and lagging indicators. So a leading indicator gives a signal before, the new trend or reversal occurs. So these indicators help you profit by predicting what prices will do next. And then leading indicators typically work by measuring how overbought and oversold something is. What do we say when you're saying overbought? Overbought means the price has reached the highest point, no more buyers. Oversold means the price has reached its lowest level, means we don't have any more sellers. So when it reaches oversold, that means sellers are taking their profits. And what do they want to do? They want to capture whatever they got. Then buyers will be coming in heavily. Overbought means the buyers are been exhausted, they're taking in their profits, and the sellers should be looking to get in. So this is done with the assumption that if a currency pair is oversold, it will bounce back. This is a leading indicator. This is the price. So of course, a leading indicator before this price goes down is giving you a signal around this area as you go down. A leading indicator is giving you a signal around here before market goes back up. So you can see an oscillator is a point moving from one point to the other. So that's what an oscillator is. Then we have a lagging. So we have a leading. Leading is giving you a signal before new trend or reversal. What about a lagging? Lagging now indicator gives you a signal after the trend has started and basically informs you, hey buddy, pay attention, the trend has started and you're missing the boat. So now lagging, now it's trailing the trend because now the trend has started, but now you need to trail the trend up to how far the trend will go. So that's where, of course, lagging indicators will come in or will work well when prices are moving in the relatively long trends. Especially the last 2-3 months, prices have been really moving in quite huge trends because the demand has been on the roof. So they don't want you of any upcoming changes in prices. They simply will tell you what the prices are doing, rising or falling, so that you can trade accordingly. So you're probably thinking, I'm going to get rich with leading indicators and you would get profit from new trend. Yes, very true. You would catch the entire trend every single time if the leading indicator was correct every single time, but you won't be. So you can see this guy has a magnifying glass. So what is it trying to do? We want to be able to catch the best trading opportunities and of course profit from the markets as much as possible. When you use leading indicators, you'll experience a lot of fake outs. So leading indicators, they are notorious for giving bogus signals, which could mislead you. So, and also leading indicators that mislead you. Okay, so let's continue. So the other option is to use lagging indicators, which aren't prone to bogus. So we'll combine both leading and lagging. So that's why you're seeing my chart looks like this, so that at least we can be able to see what's up. So a lagging indicators only give signals after after the price or after the price change, and really it's clearly forming a trend. So once you see a very nice trend, that's where now you'll be using the lagging. The downside is that you'll be a little late. So the only problem with the lagging, yeah, they'll be able to track the whole trend and where the trend is going. But the challenge is you don't get the trend early, because the idea is we need to get the trend very, very early before it's gone. So often the biggest gains of a trend occur in the first few bars. So by using a lagging indicator, I could potentially miss out on much of the profit. And that's it's like wearing bell bottoms in the 90s and you think you're cool. Anyway, it's like kind of discovering Facebook for the first time and all your friends are already on TikTok. So you can see technology moves very fast. Most of the teens are ditching Facebook for what? Snapchat and TikTok. And of course, Instagram. So it's kind of getting excited, buying a new flip phone now that takes photos when iPhone 11 Pro came out. So lagging indicators have you buy and sell late. So I need you to understand, lagging indicators will have you buy and sell late. But in exchange for missing any early opportunities, they greatly reduce risk. They greatly reduce risk by keeping you on the right side of the market. So I really love lagging indicators, but for me, I'll combine both leading and lagging. So leading indicators are also called oscillators. Oscillators, momentum indicators, but mostly they're called oscillators. Lagging, they're also known as trend following indicators. So always know there are two indicators, leading or lagging. We also have others which are really prone to fake outs. Fake out means the indicator tells you to sell, then it's buying. So we'll also look at that. But mostly for today, let's just look at leading and lagging. While the other two can be supportive of each other, they are more likely to conflict with each other. So the lagging indicators don't work well in sideways markets. So most of the lagging, they're working well in trending markets, waves. I'll also teach you about wave trading. Wave trading is whereby we catch the trend early, not just catching the trend early, but we are able to see how far the trend goes and make as much money as possible, or as much profit or pips as possible. Do you know what does though leading indicators? So yeah, they are the best in sideways. So you can see also leading indicators, the oscillators, they are really good in trading sideways. So markets are usually in threes. They either trending up, down, or sideways. I need you to understand that. So markets are in threes, either trending up, down, or sideways. So the first case scenario, you need to establish the first moment you come to trading. Now that's if you're a day trader, swing trader, or either you're a position trader, is what kind of market environment are you trading in? Are you trading in a rising or falling, or are you trading in a sideways market? So the general approach is that you should use lagging indicators during trending markets and leading indicators during sideways market. So we're not saying that one or the other should be used exclusively, but you must understand the potential pitfalls of each. So how to use oscillators to warn you the end of a trend. So how do you use oscillators to warn you? Now, another challenge most traders face is, like, for example, this is a trend. Let me show you. This is a trend on Euro USD. You can see it's been a very huge trend. But now, how do you know the reversal is happening? So that's where the oscillators will come in, or the leading indicators will come in. Even if I zoom out even on H4, let me use H4 so that you're able to see. So you can see this was a very, very long downtrend. So you can see from here, it was really, really, really a long downtrend. But you can see there's a reversal that seems to have happened. So you can see during the downtrend, most of the markets were just somehow below zero. Now there seems to be moving above zero. The only time they went above zero was here and here. So I also touch a little bit of this when I'm using MACD. So let me first finish on the theory so that at least we go to the practical. So it won't take much time. So an oscillator, number one, is any object or data that moves back and forth between 2 points. So an oscillator is any object or data that moves back and forth between any points. In other words, it's an item that is going to always fall somewhere between point A and B. It's more like a ball. When you hit a ball on the wall, it will come back. When you hit a ball on the wall, it will come back. So that's more or less likely what an oscillator looks like. So you can see it moves in waves like this. Can you see? Waves like this. Give me a minute. My cloth here is, I think I'm okay. So let's continue. So think of it when you hit the oscillating switch on your electric fan. think of our technical indicators as either being on or off. So when you hit that switch on, the electric fan will start moving. So basically, that's what our technical indicators are all about. More specifically, an oscillator will usually signal buy or sell, with the only exception being instances when the oscillator is not clear at either end of the buy or sell range. So what does this sound familiar? So we have Williams, stochastic, parabolic, and relative strength index. They are all oscillators. So they work under the premise that as momentum begins to slow, fewer buyers, if in an uptrend, or fewer sellers, if in a downtrend, are willing to trade at the current price. So this is the premise we are working, that if we have been, when momentum is slowing down, fewer buyers, if you're in an uptrend, or fewer sellers are willing to trade at that current price. A change in momentum is often a signal that the current trend is weakening. Each of these indicators is designed to signal a possible trend reversal. So where the previous trend has run its course, the price is ready to change its direction. Like this one, for example. So you can see, this was the stochastic. It seems to be moving above 20. So signaling a buy, but then there was another sell. You can see, this is what I mean. Then here there was a sell. You can see it was going just below 87, below 70. So this is what I'm talking about, these oscillators down here. So let's continue. So then during the third week of January, stochastic, parabolic, SAR, and RSI all give sell signals. Parabolic is the dotted blue line. Stochastic basically has two lines, 80 and 20, and RSI has 70 and 30 or 70, 25. So when the market hits above here, it's overbought. When the market hits below here, it's oversold. Oversold means it's looking to go up. Overbought means it's looking to go down. So that's what oscillators more or less are all about. So let's continue. So during the second week of April, so let's continue. Stochastic is based on high to low range of the time period. In this case, it's hourly, yet it doesn't count for the changes from 1 hour to the next. So I need you to understand, stochastic is based on high to low range of time period. In this case, it's hourly, yet it doesn't account for changes from 1 hour to the next. While RSI uses change from one closing price to the next. So that's the beauty. RSI is looking at the closing price of one closing price to the next. What uses the change of one closing price to the next. What parabolic has its own unique calculation that can further cause conflict. So I won't touch more on parabolic. I'll be touching more on RSI. So it's hogwash. So how do you use MACD to confirm a trend? So the indicators that can do so have already been identified as MACD and moving averages. These indicators will spot trends once they've been established at the expense of delayed entry. The bright side is that there's less chance of being wrong. So let's have a look at this. So you remember we're also combining them with moving averages. So you can see here there was a sell, and also MACD was showing you there was a sell. So around October, 10 EMA crossed above 20 EMA, which was a bullish crossover. Since similarly, the market made an upward crossover and gave a buy signal. So I'll show you this practically. So let's just do the summary. As I've told you, there isn't much I can really tell you about. I'll just show you practically how these oscillators work. So many forex traders use technical indicators as part of their technical analysis. So you have leading and lagging. So let me show you. So for the leading indicators, we have stochastic, relative strength index, and the momentum indicator. So there's a one indicator I'm going to add you today. So let's go to practical, because I think theory we are done. So just note where you are. So let's note on our notes. So we have leading indicators. We have said we have stochastic, RSI. So you just write there leading. We are looking at stochastic, RSI, and RSI. There's also Williams, but Williams I won't touch. Let me just touch stochastic RSI because Williams is a bit complex. Let's use stochastic RSI and momentum indicator. Let's use those. Then for lagging, These are trend following indicators or trend confirming indicators. They are trading signals of the lagging indicators come after the event has occurred. So there are those people who are quite conservative in trading. So most likely we are looking to use a lagging indicator because they're like, once the big event has occurred, there was a big major news, there was a big economic event. Now that's when we are riding the trend. So that's where the lagging indicators. The only disadvantage of lagging indicators is that they put you in a they put you in the trade fairly late. So for these ones, of course, now we do go to lagging. So for lagging, we are looking at moving averages. So MAs, just right there, MAs. So MAs now is moving averages. We're also looking at, so we have simple exponential. These ones I touched on them on our class we had the other day. And the only one I did not touch was weighted. So I'll give you that as your assignment. So go look at weighted moving average. But for simple exponential, those ones I explained. Then we have, so I'll not touch on parabolic. It's usually quite lagging, but at least I'll use MACD. So MACD is basically now following the trend and seeing how far the trend is going. So how do you figure out when to use oscillators or trend following indicators or both? That's what the $1 million question. So how do you use it? After all, we don't know how it always works. So let's go now. So I think we are done. Sorry. 1 minute. So let's go to our chart. Sorry, where's my chart? Oh, my chart is here. So now let's go to see how we use fast RSI and a stochastic. So now follow, because I've been trailing the euro. So the euro, I'll look at it on a shorter time frame, 1 hour chart. And then that is from, just a minute. So I have this indicator. It kind of shows me fibs automatically. So now I zoom in. So you can see the trend I was following. So this is a trend following indicator, this moving average. Because this one I'm using 250. So I'll use an EMA 20. So let me add insert. So I'm inserting lagging indicator. So trend. But now I'm going to use so you can use 20, but now you can see here we have simple, exponential, smooth, and linear weighted. So the one I wanted you to have a look is weighted for your assignment and smooth later. But for me, let me use exponential and give it maybe an orange or yellow color. You can use gold. Yeah, so you can see that's our EMA 20. You can see it's still above 50. So seems our trend seems to still be strong. What about on M30? On M30, on M15, seems to be going down. So we had an upside move yesterday. This was how many pips? Almost 108 pips. So how do we use lagging? So now for lagging, I have to use a longer time frame, like for 1 hour or 4 hours. Let's use 1 hour for now, because you can see somehow the price is within the range of 20 and 50. 50 is 50 SMA, because 50 basically is showing me, are we trending up or down? So this is our MACD. You can see that we have bars. Then we have this line. So this line is our MACD. So every time the line goes above the bars, we are looking to sell. But now the challenge is the bars, if they are always above 0, as you can see now, it came down, but could not go below. It seems the bars seems to likely want to be forming above. They're still above 0. So that means we're still trending up. Then we can go to 4 hour. So I'm using stochastic. You can see we have hit 80 overbought. So that seems on stochastic, we seems to be going a little bit down. What about on RSI? Let's look at RSI. On RSI, we are somewhere in between 70 and 30. We usually have a 50. So RSI here, I can add a 50. So okay. So just a minute. So yeah, so you can see our RSI, we have 70, 50, and 30. So I've said on leading, I'm touching on stochastic and RSI. These are the stochastic and RSI. And then also the momentum indicator. So this one has to go a little bit down so that I add the momentum indicator. So let me also add a momentum indicator. Then it should be on trend. No, oscillators. Yeah, you can see here, we have ATR and the rest momentum. So we have two. Here is momentum. So this is the momentum I'm looking for. I'm hoping it's this one. Is it the one? No, it's not this one. Let me get it. Just a minute. So just a minute. I had it here. Let me get it on GU. Yes, this one. So this is the one I want, but I need to get the momentum 8 indicators list. So this is momentum 8. This is what I wanted. So visualization, the description, 100 levels. Okay, let's go back to our euro. So that momentum is the one I want, because what momentum does, all it does is show me whether we are going up or down. Let's see, oscillators. No, it should be under volumes. No, Bill Williams. It's not this one. Anyway, let me see if I can get it from my custom. Momentum. Yeah, it's this one. Awesome. I found it. Was it this one? Momentum levels 100. Let's put in this one, see if it's the one. No, it's not this one. Where did I put it? Just a minute. Trend following. So anyway, let me figure out where it is, but I'll show it with you on GU. But basically, I wanted you to see now when the market is going down, we are looking to sell. But now we have to go with a shorter time frame if we are day trading. So you can see now on day trade, stochastic has already hit 20. So when the moment the price hits 20, and then on RSI, it has also hit 30. This seems, and also we are just above 38. That seems like this trend might start going back up. Then MACD, you can see that they have started forming just below. So on M30, let's go to M15. Yeah, so M15 you can see, so there was a small sell. So for scalpers, day traders, they made an extra 42 pips. But then now you can see this seems to be rising back up. That is RSI, stochastic now, and MACD. For the MAs, you can see they're still crossed above. So that means MAs, the lagging ones, they're still showing you the trend should be going up. Let's go to a longer time frame, like 4 hours, then have a look. Yeah, have a look. You can see 4 hours, the bars are still strong above. So that's why I was saying this sell was shortly, because you can see the bars are still. So if the next bar still forms and still above, that is to mean that we're still trending up. So let's go to D1. So D1, we are still down. You can see the bars are still below. So that's why I was saying this big trend. So right now, for us to get a reversal, we can check on D1. We'll have to check on 4 hours, especially 1 hour, because all we need, but you can see at least on 1 hour, the trend seems to have changed. Let's go to weekly. Yeah, so weekly looks like this. Yeah, weekly now is good. So for you to get the correct trend, you have to always look at the weekly time frame. because you can see on the stochastic what's happening here. So, and also RSI seems to be above 30 and has crossed above 50. So it seems this euro might somehow quite go up, but I don't know up to where. Say up to 50. So we are expecting maybe 200 or 300, 304 pips. So that's for stochastic and RSI. So what you do, all you need to do, always check the price, whether you can see this was a good sell. From here down here, this was a good sell, was almost 500 pips, but it ended up to around this point. Came up, then went down. So for the RSI, all we are looking at is the red line and the green line. So we have combined RSI 13 and 3. So all we need is when they are crossing. So there was a sell around here. Yeah, that was our sell. There was a buy around here. You can see, and then there was a W. So you can see they were all aligning. The RSI, stochastic, MACD, the bars were low above. So then moving average, you can see what were they doing? What was the moving average doing? Moving average, they were all above. So basically, that's how you use oscillators. So I'll also show you a little bit on GU. GU is the same case. So GU, I still have now momentum. So momentum, what it does, I only need this red line to be above. So you can see it's still above 100. Every time it's above 100 on whichever time frame I'm moving up. So right now it has crossed 100, but this is short term because you can see we are already oversold. So you can see how important these oscillators are, because what do? They're telling us if we are overbought or oversold, if the momentum has ended for the buyers or the sellers. Right now, these sellers, seems momentum is almost about to end. I can even go to M30. You can be able to see. So 1 hour, 4 hours, that's where we are. So on 4 hours, you can see it's been going up and down, but we have a lot of support down here. So that's all for today. So guys, thank you. We'll continue more next week unless we have any questions. Do we have any questions? Any questions? So if there are no questions, let me wish you guys a lovely weekend, and let's link up on Tuesday for more. But now we'll be doing more practical. So thanks so much for your time, and wishing you all a lovely, lovely weekend. So thanks for now and enjoy. So unless there are no more questions, let's end the class there. So goodbye, enjoy your weekend, take care, bye.